Okay, hello everyone. Can you hear me? I just would like to know if you can hear me. Okay. All right, all right. Hello everyone. Hello everyone. Thank you all for joining. It's wonderful to see you here. I'm thrilled to have you all here. And okay, so yes, familiar names, right? Okay, right. So let's get started. Welcome to the Global Lawyer, a series of live sessions we will hold on the São Paulo Lawyers Institute's YouTube channel as one of the many, many attractions that we put together to celebrate IASP's 150th anniversary celebrations. Uh, for those of you who don't know me, I am Marina Bevilacqua, a Brazilian lawyer, legal translator, legal English teacher, and a tireless researcher on topics concerning comparative business law in the broadest sense possible when it comes to the convergent and contrasting points between civil law and common law systems. I have 20 years of experience assisting clients across multiple jurisdictions. I have worked with transactions involving foreign trade, mergers and acquisitions, wealth management, international contracts, to name a few. This extensive practice has broadened my perspective on global business operations. It allowed me to witness and adapt to the significant developments and changes from the late 1990s to today. Okay, in this first session, I'll be flying solo, all right? But in the upcoming sessions, I'll be hosting special guests who will join us in lively discussions on critical legal areas. And you know, um, we have already, okay, I'm not allowed to give any spoilers just yet, but we already have a few distinguished names in our lineup, including many prominent legal scholars, specialists practicing abroad, general counsels, successful litigators, and renowned academics as well. So by holding these sessions in English, why in English, right? Because we are here, we are all Brazilians. And I would like to say that we at IASP, we intend to give Brazilian legal practitioners a place where we can safely speak with peers, work through complex topics, bring our discussions up to an international perspective, and reach out to other jurisdictions. Okay? Uh, and so by holding, I don't know if you can see my screen, right? I just, oh, something wrong here, okay? Oh, no. All right. Because you see, as non-native English-speaking lawyers, we often run into unique challenges in the international scene, mainly because the legal field traditionally involves advanced rhetoric, and we all know that great oral skills are key to our success. Getting the hang of English in this context can be pretty tough, given the complexity and nuance of legal language. Since the language is the tool of the lawyer's trade, we usually strive to sound as proficient in a second language as we would in our mother tongue. However, we might sometimes feel self-conscious when practicing in another language. So these live sessions aim to offer a safe and friendly environment for Brazilian lawyers to practice while simultaneously tackling complex legal issues. And in this way, we can build confidence and expertise together. Well, at least that's what we'll try to do here today in this live session, and I hope it goes well. Okay. Now, there's something strange with my, okay. All right. So, finally, we can't deny that being able to use English effectively on the international stage not only boosts our ability to communicate and argue persuasively, but also broadens our practice. It opens doors to new opportunities, letting us connect with a global clientele, team up with international colleagues, and keep up with the latest legal trends worldwide. So taking on this challenge can really make a big difference in our career. In the early 2000s, when I first started working, legal practitioners with legal English skills were a minority. However, I have witnessed, and we have witnessed, of course, a remarkable transformation over the years, not only among my clients, but also among my peers. Today, technological advancements, online lectures on platforms just like YouTube, like here, and the widespread nature of international practice, they have dramatically improved language proficiency among Brazilian lawyers. Despite this progress, mastering specific legal terminology and terms of art still varies depending on the area of the law, which suggests an ongoing need for specialized language training and continuous learning. Well, this is why we are here today. It was with this in mind that we at IASP decided to offer this platform as a space for us to use our most valuable professional tool, language, a lingua franca, so we can keep up with global trends, lay out our ideas clearly, and build on each other's insights, while polishing our legal English skills in specific areas of the law, just like we do in Portuguese, right? So our approach here is intended to blend comparative law and communication resources, which means using language effectively as we navigate through cross-border transactions and their legal implications. Okay, enough talk, let's get to the point. The new law. The new law on offshores and trusts taxation. Well, the new law represents, it is a broad law. It does not provide only for offshores and trusts, we know that, but it represents a significant shift in the legal framework governing offshores and trusts held by Brazilians abroad. It aims to provide greater clarity and regulation to an area that has traditionally been marked by a long-standing regulatory gaps. Okay, well, you may know that. And although not perfect, the law clarifies many obscure points that, until very recently, were treated inconsistently under Brazilian tax law and caused much concern. If we look back, since the mid-20th century, Brazilians have tended to invest abroad to escape currency risks, country risk, and the insecure economic environment at home. This widespread practice often involved creating trusts and organizing offshores in foreign jurisdictions. And according to the Brazilian Central Bank, Brazilian investments abroad have grown significantly from the 1950s to today, with a notable increase in the past few decades. Right, so let's lay some groundwork here so we're on the same page before hitting the main points. Okay, the first thing I'd like to say, and establishing a context, a bit of a context on offshores. And let me see if my mic is operating correctly. I can. Okay, someone is. Okay. Let's look at the context on offshores. So the offshore, I'm going to use offshore just to keep it short for us for now, to ease our communication here. But offshores are in fact the controlled entities that the law talks about. Okay. And the law brings, as I said, numerous innovations to the taxation of income earned by individuals through structures abroad. Okay? And the law, of course, not to mention the taxation of income from funds held here in Brazil, which now will be subject to withholding periodic taxation, the notorious comicotas, which is the tax withheld at source in May and November on the earners from investment funds, but which are not within our scope of analysis today. There is something wrong. I think there's something wrong with my sound. I would like to, let me see if I shift. If I shift, let me know. Okay, 1, 2, 3. 1, 2, 3. Is it better? No. Here. Maybe the folks on YouTube may help me. Just let me, just a second, folks. Bear with me because it seems like we're having a bit of a sound issue. Just a second, folks. All right, maybe if you move to the other room. And okay, it's better. Okay. Okay. Where were we? Oh. So again, the law brings numerous innovations, okay, on the taxation of individuals holding investments and earning income through structures held abroad. All right. So according to the law, in Article 5, Paragraph 1, the law says companies and other entities, either incorporated or not, and this is interesting because to incorporate, it's a false friend. Incorporate means to organize a company, which means incorporated or not means either having or not having, either being or not being a legal entity. Okay, it has nothing to do with incorporação as a corporate event, like a merger. Okay, incorporação in fact is merger, right? Não é fusão, just to make it clear. So companies and other entities, incorporated or not, including investment funds and foundations, where an individual, so this is the concept of controlled entities, where an individual, and here individual rather than legal entity, okay, individual or natural person, holds rights, ensuring preponderance in company resolutions, in electing or removing the majority of managers, or, and this is important, here, company resolutions. These are deliberações deliberações sociais, okay? Just let me know. All right. Okay with the sound. Thank God. So company resolutions, deliberações sociais. In electing or removing the majority of managers and removing destituir, just to point some a few words and vocabulary, holds more than 50% interest in the company capital. Okay, so controlled entities are these companies that are intended to hold financial assets or other investments. And here we can mention real property, securities, aircraft, vessels, crypto assets, bonds, and you name it. Okay, and there are two important criteria for the controlled company to be included in the law and to be subject to the automatic 50% taxation, right? So the two criteria. The first one, entity organized in a tax haven, okay, which means a favored tax jurisdiction or under a privileged tax regime, okay? And the nations that are considered here in Brazil, nations with favored taxation system is in normative instructions 1037, okay? And tax havens are considered jurisdictions where no tax is charged on income or on capital gain. Okay, so this is the concept. This is one of the key features of a company, of a controlled company for purposes of the law. And here, not to, don't confuse tax haven with tax heaven, okay? They may sound similar, but they mean different things. Haven means refuge, while heaven means paradise. And the term paradise has become commonly used because many offshore companies are located in idyllic islands and nations like the Bahamas, Cayman Islands, the BVI, and etc. Okay, just a curiosity. The first criteria is to be located in such jurisdictions. The second criteria is that the companies abroad, the offshore, they must have an active income of less than 60% of its total income, which means that it must have a passive income that exceeds 40%. And what is a passive income? A passive income is an income that doesn't come from the business activities and the operations of the company. All right. So if these two criteria are met, if these two criteria are met, then we have a controlled entity for the purposes of the new law. All right. And here it is there's an interesting thing. The exception when it comes to the active and passive income, the exception is are the real estate developers, okay? Because in their case, the real estate is their corporate purpose. So transactions involving real estate and lease and you name it, in the case of real estate developers, of course, they are not within this category. All right? Very well. What we've had until 2023, what we had, yes, until 2023, and which remained for a few decades, were two tax regimes for Brazilians with structures abroad. A system for taxation of income from investments held through offshore structures, and another system for the taxation of income from investments held by individuals directly, okay? So for all these offshore structures, until last year, Brazilian taxpayers were allowed to defer taxation as long as the shareholder or partner or member of the offshore did not receive dividend payments. So to have a deferred taxation system, to have tax deferral, means that taxation would only apply, would only be, taxes would only be charged upon the cashing out of the money, okay? Not on the earning of the money in the books of the company, right? So taxation only applied if, when, and to the extent that the income earned by the offshore was distributed to owners, members, shareholders as dividend payments or as payments of personal expenses. And in these two cases, the means to pay the tax was the carnê-leão, all right, for dividend payments that were cashed and for payments of personal expenses. These personal expenses, they fall within the category of expenses with travel, for instance. Everything that was related to personal expenses for tax purposes were considered payment of dividends, and they were taxed, and they were subject to taxation, all right? So we had a cash basis system, regime de caixa, all right? As opposed to an accrual basis, regime de competência. In a cash basis, in a cash accounting basis, revenue and expenses are recognized or booked when cash is actually received or paid, just as we saw above here. And the accrual basis, in this system, revenue and expenses, they are recognized when they are earned or incurred, even if the cash is received much, much, much later, years later sometimes, okay? One of the most important changes brought by the new law is precisely this tax deferral, this end of the tax deferral, okay? So it does not apply anymore from now on, from January 1st, 2024, okay? All right. Now, let's see. Yes, continuing. So the taxation, okay, we had this cash, this cash basis, and now let's elaborate a bit on that. In the cash basis system, we have as the taxable event the income effectively received or cashed. And taxable event é o fato gerador, all right? So carnê-leão, which is valid only for individuals, okay? So there was a range between 7.5 to 27.5%, a progressive tax rate, okay? Monthly payment, tax rate means alíquota. And the monthly payment means that it had to be paid on the last business day of the month subsequent to the month of the earning, all right? So when dividends were effectively received by individuals from their controlled entities, so when the money was brought here from the income of the offshore, then the individual had to pay the tax through carnê-leão, okay? And dividends, and not only from, okay, so this first category is are the dividends effectively received by individuals from the offshore companies. Then we have a second type of, a second taxable event, which is the dividends from investments in securities effectively received. Securities held in the stock market. These are considered non-controlled companies or invested companies. So the companies in which you have invested, but you don't control, all right? Like private equity, venture capital. And in these cases, until 2023, the carnê-leão would be the proper means of complying with the tax obligations. As of 2024, from now on, these two situations here, these two types of dividends, they will be charged, they will be taxed at 15% in accordance with the new law. Okay, it's in Article 2. And the other taxable event was the rental income paid to individuals, of course, not to offshores. Salaries, wage earnings, okay? This hasn't changed, okay? So, and remember, rental income is not a financial asset. So, and this is where things start to become a bit confusing because specialists disagree, and I have to say, brilliant specialists. I know some of them say that the Carnê-Leão will continue to apply to rental income, whereas others say that the rental income will now fall within the 15% of the law. Something that we have to work through because in fact, I'm not going to get into this contested issue, especially since I'm not an accounting expert. So I'll leave that battle to the initiated, okay? If you know what I mean. Okay, now, besides the Carnê-Leão, we had the capital gain, right? We have, in fact, Carnê-Leão has not ended. We still have it, of course. We had it before, and we still have it because it hasn't ended. What changed was the tax regime, and we will see this in a bit. So the capital gain applies with a range between 15 and 22%, 22.5%. Also a progressive tax rate, just like Carnê-Leão, the GCAP, né? And the taxable events, os fatos geradores, they are the sale of assets, interest from financial investments, and capital reduction. The sale of assets is simple, okay? It remains the same. When you sell an asset and you have a capital gain, and you have to pay in proportion to the value, the tax rate that will apply. Now, interest from financial investments that experts usually disagreed and adopted Carnê-Leão here instead of the capital of the GCAP, because they would say that even if sometimes the payment would be higher, the possible offsetting or deduction later on in the income tax would be advantageous. So this is another accounting issue, another accounting aspect. So for example, $1,000 bond with a 5% annual coupon rate. This coupon is considered equivalent to interest for tax purposes. Okay, so upon receipt of the interest, this receipt of the interest generated the duty to pay the tax. Okay, the GCAP. What is going to happen from now on? As of 2024, this is going to fall under the 15% unified tax rate provided for by the new law. All right. And the next taxable event is the capital reduction. And people might say, oh, but if the capital is reduced, why should I pay tax for a reduction? Because when you reduce the capital of your offshore company, you take money from there and you bring the money to you here, right? So until 2023, there was no taxation on the exchange variation that would occur in this transaction. Okay, so for instance, 1,000 capital investment at with the dollar at 3. Okay. Then you would reduce the capital. But at the time of the reduction, the exchange rate is no longer 3, it is 5. Okay, so on this difference earned from the exchange variation, this was not taxed, but now it will be. All right? Okay, what else? Yes. Okay, there is something about the opaque and the transparent systems. We're going to get there in a few minutes, but this is pretty much what I had to say about the two taxation on the that would be paid by the individual, right? There are also um, two important exemptions that have ended. And there are others, if I'm not mistaken, but there are two that I'm going to mention here. The first one are the exemptions concerning assets acquired by individuals as non-tax residents in Brazil. Okay, so for instance, I go to Portugal, and after a while, I'm back to Brazil, and I would like that everything that I purchased while I was there is not taxed. Okay, we could do that. Everything that a Brazilian citizen, while temporarily residing abroad, uh, bought, or everything that he invested in or purchased in terms of financial assets, stocks, and bonds, until 2023, these assets were all tax exempt from capital gain. Okay, when the person came back to Brazil, right? This is not like that. This is not the case anymore. So taxation will be levied on these purchases made or these assets acquired by non-tax residents when they're back to Brazil. And the second exemption that ended is the capital gain imposed on the exchange variation of assets acquired with income earned in foreign currency. So, for instance, I have the example here of a stock, yeah, Apple stock. So I purchased Apple stock, traded at 100, and at an exchange rate of 3. So in reais, I spent 300. If the exchange rate rises to 5, when my investment appreciated because now it is worth 500, then if the trading price of the stock remains 100 at the time I decide to sell it, then no tax was due. So the exchange variation was not charged, was not taxed. Okay, but this has ended. From now on, it's going to be taxed, and the reason is because from now on we are going to look at these numbers, looking at the Brazilian reais values. Okay, so we're going to look from the reais perspective, not from the US dollars perspective any longer. Okay, and yes, so these are the two tax exemptions that I had to mention. And another important, huge innovation, and I would say that it is particularly it's particularly important for us because next week we have a deadline. So the law establishes that we must decide in our income tax return, in our individual income tax return, whether or not to join or to opt for we have to make two decisions, okay? And these decisions are very, very important because they are irrevocable. They are irreversible. So once we decide, we can't go back. All right, the first one is the deadline for Brazilian residents to make to update the cost value of the assets and investments at a reduced tax rate, 8% instead of 15. Okay, and this is in Article 14. And the other one is whether or not to adopt the transparent tax treatment of controlled entities, which is in Article 8, and which is a very contested issue. And okay, we're going to go through it, but it is important for us now because next week on May 31st, this deadline expires, upon the filing of the individual's income tax return. So we have to decide this until next week, if not already decided. All right. Now, let's take a look at the first decision. Okay, here, tax authorities, they are offering the opportunity to, as a form of transition, step up the costs, the cost basis for our investment portfolio. So let's say you have $1 million at the exchange rate of 3. So we have 3 million in our income tax return, and you have to be, okay, for you to be able to adjust, to update, to adjust this amount, the amount must already be included in your income tax return of 2023, the base year 2022. All right. So the taxation is on the difference in Brazilian reais between the cost value and the market value. So continuing in our example. So if I have $1 million at the exchange rate of 3, and so I have 3 million Brazilian reais, and this is what it says in my income tax return. So what I can do is to take this 3 million Brazilian reais, and considering that now the exchange rate is 5, I can make my portfolio worth 15 million instead of 3. And on this difference, you see, on this gap, pay a tax of 8% instead of paying 15 on the cost value in May 2025. All right? So taxation applies on the difference, again, between the cost value that is declared and the market value. Okay? And there is a list of assets that may apply to this case. And the interesting thing is that the law has already brought the basis for adjustment. So in the case of financial investments, we have the bank statement or the broker statement as the basis for adjustment. Real estate vehicles and aircrafts, vessels, all of these are the basis is based on expert valuation, all right? And controlled companies in the owner's equity, patrimônio líquido, as stated on the balance sheet of the offshore company or the controlled company. Okay. Now, on the second decision, and this is the tricky one, the trickiest, the tax transparency model. The tax transparency model had been used in the United States for many years. And so by instituting this treatment in Brazil, we are aligned with the G20 nations, and we follow the OECD tax transparency standards. Well, this commitment to tax transparency is facilitated by frameworks like the Common Reporting Standard, okay, developed by precisely the OECD, the FATCA. But we have to bear in mind that this option is irreversible, which means once I opt for the transparent system, I must stick with it. I cannot come back to the opaque or the non-transparent system. What happens here? Here, individuals may tax the assets held by the controlled entity as if they are held by them individually. Okay, so it makes the company transparent. And taxation is on the cash basis, on the cash accounting basis, regime de caixa. Okay, but the interesting thing is, although it is in the cash basis, we have to be very careful because we have to keep a spreadsheet of all transactions and of all numbers, because throughout the year, the tax is going to be paid in the next year, in the next income tax return, the next deadline for in May 2025. Okay, so from today, in fact, from January 1st until December 31st of 2024, we have to take careful control of all these numbers, because you see, the exchange rate for purposes of for booking purposes is the exchange rate of the day of the earning. So you see, if you have so this is why experts and specialists are advising people not to adhere, not to join the transparent system. Okay, the only person who has convinced me otherwise was my dear friend Marcio Bonfilioli, and because we talked about his case, and okay, in his case, but the case transparency, I would say that is an exceptional case. So because it is a new system, it has never been tested. We still have the income tax regulation to be updated, and we still have things that are not settled. So we don't know exactly what may come in the short run, in the near future. So joining the transparency regime, in addition to being a bit complicated, it involves all the owners, all the members. So if you have a control entity with more than 2-3 people, more than 2-3 owners, all of them must adhere to the transparency method in their income tax returns, which I believe it's going to be very, very confusing, because you can't oblige, you can force someone to do something if they don't want. I don't know what's well, the future will say what in the future we will see what is going to happen. But when it comes to the numbers in the income tax return, so for example, so for those of you who want to, for those interested in adhering to the tax transparency, so for instance, a controlled entity holding 3 assets, 1 stock and 2 bonds. Well, at market value on December 31st, 2023, the stock is worth 50% of the company capital, and the 2 bonds are worth 25% of the company capital, each of them, 25. So in your income tax return, your share of the company capital is declared at cost at, for instance, if your share corresponds to 1 million reais. So in this case, in the tax transparent model, you will enter, instead of 1 single line in your income tax return as you used to do until now, and this line would correspond to your share in the company, 1 million share interest. Now you use 3 lines. Why? Because there are 3 assets in the company. So 1 line will be used for the stock at 500,000 Brazilian reais. The other one for the first set of bonds at 250,000 reais, and the other one and the same for the other one, 250,000. So this is the method. This is the procedure that must be adopted by those interested in adhering, in joining the transparent method. Okay. Now, so this is how you're going to report it on your income tax return. Okay, that's it. So in sum, what you have to do is to take the percentage of the company capital represented by each investment asset and enter each of them in your income tax return. Okay, so what about the non-transparent structure? Okay, the opaque structure. Uh, in this structure, nothing changes, in fact. All the profits accrued until 2023 will only be taxed upon effective distribution. Remember the deferred system. Yes, it remains. So let's say you don't update and don't opt for the transparency. In this case, you don't have to do anything different from what you have been doing, okay? And taxes on this inventory, this is stock or this inventory, the assets contained in your income tax return of the previous years, the taxation on they are only be taxed upon cashing, right? So they will remain in the accrual basis accounting system, all right? O regime de competência under the under the deferral system. Yeah, in fact, it's not the same, but it's the deferral system. It will be deferred, and it will only be taxed upon receipt. All right. One thing that is good in the opaque structure is that no taxation on exchange variation is going to be charged. Okay. And non-transparent structures not opting for the 8% will adjustment. Okay, I already have said that. So everything remains the same. But non-transparent structures which opt for the 8% taxation, and this is what I had to tell you about how to process it and how to enter it into your income tax return, is if you do opt for updating your inventory, you are going to you have to include all the assets under the controlled entity, okay? Because you see, it's a bit complicated. Oh boy, it's complicated. In fact, it is like this. In the transparent system, you may opt. If you opt for the transparent system, if you may choose which assets you would like to adjust, to update, okay? You can choose. I'm not saying this is different from the option for the transparent system, which involves all the owners, all the members, all the shareholders. All right, but in the opaque case, if you decide to update, you have to update the whole thing. Okay, everything that is under the controlled company. So in this case, you are going to, upon the filing of the income tax return, you must separate, okay, the updated value concerning the principal invested, which is the company capital, from the retained earnings. You see, the earnings that you have deferred for later cashing, for later receipt. So as dividend credit or dividends receivable. Okay, this is how it is going to be entered on the income tax return. That's it. So let's see the advantages. All right, the advantages of, we're running short on time, but we have 2 more slides. The advantages of the opaque structure. So it is a simplified tax system because only the share in the company capital is declared in the income tax system, in the income tax return. It is good for structures with loans, okay? Because in the transparent system, no deduction of loan interest is going to be allowed to help reduce the tax base, which will be allowed in the opaque system. Then investments in countries with no tax reciprocity they are not, okay, so to avoid duplicate taxation, and duplicate taxation is not the same as double taxation. Duplicate taxation means a bitributação, while double taxation é a dupla tributação. Okay, we don't have to go through this. But one example of this jurisdiction is Ireland, okay, which has no agreement with Brazil in terms of tax reciprocity. So in the opaque system, taxes paid in Ireland may be offset with the 15% of the law, whereas in the non-transparent system, you can't do that, okay? Again, the opaque structure protects against exchange variation, right? And in fact, the thing is that it depends on the structure of your portfolio. This is what, at the end of the day, it is very specific. If it is not that everyone should adopt the opaque structure, but as a rule, everything shows that it is wise to stay in the opaque structure, at least for now. Because if you decide to change later on, you can always, in the next year, financial years, you can always decide to change to the transparency model. But if you change now, this is irreversible. All right? So now I'm going to give you just an overview of trust, because you see, yes, we're running short on time. Yes, guys, time is running out. But this is yes, there's only one more. Trust. This arrangement is an agreement between two people, because it involves a third person, but sometimes this third person doesn't even know that the agreement exists. So a settlor is the owner of an estate or of assets, and the settlor doesn't know how, or doesn't want to, or is not willing to manage the assets. So he transfers the assets to the trustee. And then he determines how the trustee is going to manage the assets, okay? Because the assets are going to be managed to the benefit of the beneficiary. You see, the beneficiary may be the settlor himself, but usually someone in the family, a child, a minor, or it can be a charity. It can be, you see. I'm going to, as I said, I'm flying solo here today, because this is our first the Global Lawyer session. But from now on, we will have very special guests, and I can't tell you just now, but we have specialists, and I think our next session I'll try to arrange it for it to be about trusts and the new law, because there's so much to say about trusts. But the important thing, if we had to summarize and to say just one thing about trusts, the trust, as I said, as I was saying, and I was interrupted, I haven't finished. Let's see if I can finish now. In this structure, the settlor transfers the ownership of his assets to the trustee, so that the trustee manages the assets to the benefit, and the proceeds and the profits and proceeds of the assets are managed to the benefit of the beneficiary. All right. So there is a separation between the assets held by the trustee. The trustee may be a legal entity, right? It can be an individual, but it is usually a legal entity. And the assets, the trustee's assets must not be commingled with the settlor's assets. So there must be a segregated asset, okay? Segregated system. And upon the fulfillment of the condition, or upon a point in time or upon a specific event, these assets are going to be transferred to the beneficiary. So this is how the trust works, just in very broadly. And what is intriguing is that the law in Article 10, the law says, for purposes of this law, I should have transcribed that, okay. But for purposes of this law, the assets and rights under the trust abroad will be considered as follows. One, they will remain as the ownership of the settlor after the trust is created. So this is a huge mistake. I'm sorry, but this is not correct, because the essence of trust structures is exactly to transfer the ownership, the property, to a trustee who is going to manage the property to the benefit of the beneficiary. But now we have the law saying that for purposes of this law, the assets remain in the name of or under the liability, under the responsibility. They are kept by the settlor. So I believe that although the intention of the lawmaker, despite his good intentions, I think that they could have done better in this respect. There are other aspects of the trust that we could mention. We don't have time to do this right now, but I think that this item 1 of Article 10 is the most problematic one. Okay, and here you have an illustration. So you have the settlor, he has the asset, he transfers to the trustee. The trustee is going to manage the assets to the benefit of the beneficiary, and here you name what are the assets that make up the trust. All right. So what are the key takeaways? Let's wrap up the session, okay? Let's summarize the key points we've covered today. So the formal, don't forget the deadline for the income tax return declaration and the important decision we have to make on the transparency and the updating of the values. But what the law brought to us was the formal recognition of offshores and trusts. This is new. This is great. This has shed light to the darkness where we were, and where everyone said, one person said one thing and the other especially said other, and they didn't know how to tax, for instance, the trusts. And the trusts are taxed, oh, I forgot to say, the trusts are taxed as gifts, okay? But it is a start, okay? So it provides for it recognizes offshores and trusts for the first time in our legislation. There are reporting requirements. There is taxation of income, anti-deferral rules, the possibility to adjust the assets. Of course, there are penalties for non-compliance, the inheritance and trusts, and simplification and clarity to the, let's say it was simplified, and it is clear to the extent possible, okay? It's better than what we had before, all right? So, thank you for joining today's session. I hope this presentation, it was very, very fast. It's complex, and I thank you for remaining. I don't know how many of you are still there, but I hope that this presentation has been useful and clarifying for everyone. A big thank you to YASP and all supporters for making this possible. And I look forward to seeing you, all of you, again in our next session. And we are open to your suggestions on things that will be very, very welcome, and they will be greatly appreciated. Okay, so Thank you very much. I don't think we will have time for questions and answers right now, but I can say that you can contact me. You can contact us and ask as many questions as you like because we are it's 8:05. We won't be able to to continue, but feel free to contact us. We will be more than happy to answer your questions and to provide clarifications if we are able to, if we can, it will be great. And have a great night. So see you next time. Thank you very much.